Most traders think that the more they trade, the more money they can make. More setup opportunities means more opportunities for profit. What if your edge slowly dies throughout the session and the trades you take later in the session are not making you money, but statistically taking money away from the good trades you've already had? Because when I actually sat down and looked at the numbers behind overtrading, I realized something very, very uncomfortable. And I realized that most traders would probably be better off if they trade less. That's why today I created a free tool to show you exactly why this happens. Because I truly believe that this is one of the biggest silent account killers, especially in the prop firm trading industry. Here is the trap that most traders fall into, and honestly, I've done this myself. You start the session off with a very good winning trade. You catch one very good setup maybe during London or New York start open session. You followed your plan, you traded exactly as you wanted, and then you are green on the day at the start of the session. And most of us should probably stop trading at this point because we are already green on the day. But instead, because you feel very sharp and very confident with trading, you stay at the chart just a little bit longer. You decide to take another trade and another one. One of the trade loses, and then you need to make the loss back. Then you get a random impulsive setup you would probably not even take. But because you've been trading for hours already, your standards start slipping away without you even realizing it. And somehow the green day you had at the start of the session now turned out into break even, or even worse, a red day. So you assume the problem is your strategy or psychology, or maybe the markets have changed. But what if the real issue was much simpler than that? What if your edge was actually the strongest during the first few trades you've already taken, and everything after that point was statistically lowering the quality of your trades? Because that is the part most traders do not realize. They assume that your edge is infinite. The more I looked at trader behavior, the more I realized that people are not losing because the strategy is terrible. They are losing because they continue to trade long after the edge has already peaked. And that completely changed the way I started thinking about expectancy. Not just win rate, not just risk to reward, actual expectancy, which is basically the amount of money you are expected to make per trade over a long enough sample size. Because your strategy can have a very positive expectancy overall. But if the trades you take later in the session are significantly worse compared to the trades you took earlier, you are slowly killing your edge. And this is where it got very interesting to me, because think about it. The goal in trading is not to make as many trades as you can. The goal is to maximize the quality of expectancy you express, and those are two completely different things. Because if your first or three trades are statistically your best trades, then anything after that point is not helping you grow your account anymore. It could literally reverse the account back to zero in real time. And once I realized this, I started looking at overtrading in a completely different way. Most people think that overtrading is just a psychological issue, like you are greedy, impatient, or addicted to trading. But I don't think that. I actually think that overtrading is a math problem disguised as a psychology problem, because every extra trade carries decision fatigue, emotional pressure, lower quality setups, and more impulsive decision. Your standard slowly drops, your focus drops, your patience drops. And the scary and dangerous part is, it doesn't feel dangerous at all while it's happening. It actually may feel productive, because look, you may actually think that you work harder. You feel like you're giving yourself a chance to make more money because you are at the charts for longer. But statistically speaking, you are actually giving yourself a chance to lose more money than you make. Especially in prop firms, where one emotional day can wipe out your entire profits, lose your account within one trading session. So this is how the tool looks like. You simply enter your account size, risk per trade, win rate, average win and average loss, and the tool simply has enough information to tell you how much you risk per trade and your expectancy per trade. In this case, if you trade 50k account and you risk 0.5%, which is very conservative, you risk $250 every time you click sell or buy. In this case, your win rate is around 45%, average win is 2 hours, and average loss is 1 hour, which puts you at good trade expectancy of around $90 or plus 0.35 hour per trade. Which simply means that every time you take a good trade, you should expect around $90 profit. And now this is where the tool is very powerful and very interesting. Here we have actual trades per day and optimal trades per day. Let's say you take 6 trades, but statistically you should only take 2, because any trades after that are statistically not helping you. It also means that you just simply take 4 trades more than you should, Now we just need to tell the tool your extra trade quality, which means the quality of the trades you take above the optimal trades per day. So let's say that the extra 4 trades we take are clearly worse, resulting in negative 0.25R. But let's see what happens if we change the quality. So clearly worse is this, slightly worse is this, revenge is this, and we can even add custom at, I don't know, negative 1R. But let's keep it at clearly worse, because this is what actually shocked me. Because even on clearly worse, I am estimated to lose $5,000 simply by overtrading. And it's not because my strategy is bad, it's because I simply overtrade. And if we scroll a bit down, the tool actually shows you why this happens and how. You can see that my first 2 trades are green, which is the positive trades that I should take, but anything after that is red, resulting in minus 1R overall. So the goal is to remove those 3, 4, 5 and 6 trades from the equation, and let's hope it will result in only positive trades. So let's see what happens. Perfect. I am no longer losing to overtrading, but let's say we take 3 trades, it still puts me at negative $1,200 per month on average. So this tool can simply show you how you can help yourself and how much overtrading costs you. Because let's refresh and let's say that we trade 6 times per day, but let's even cut it to 4. We are simply cutting the losses in half by just reducing the amount of trades we take. And this is exactly why I told you earlier that overtrading is a math problem, not a strategy one. Because these numbers do not lie, and every trade you take has a price. You just never actually see this in the moment without actually sitting down and using this tool. So let's get back to the video. The scary part is that most traders are not underperforming because they need a better strategy. They are underperforming because they are overexpressing their edge. They are trying to squeeze every single possible trade out of the session until the quality of the trades they take completely disappears. And once that happens, the market quickly takes away all the profits they made because their edge is not infinite. It has a limit, and if you trade beyond that limit, eventually statistics stop working in your favor. So before you go searching for a new strategy, a new indicator, or even a new prop firm, ask yourself one question and be very honest. Do you have a strategy problem, or do you simply do not understand when to stop trading? Because if you think about it, those are completely 2 different problems, and one of those problems is very easy to fix. So if you want to test this for yourself, I will leave the link in the description to the tool I showed you earlier. All you have to do is just plug in your numbers and it will show you statistically how much extra trades are costing you per month. Because you might realize that the fastest way to become profitable is just to simply trade less and learn when enough is enough. Thank you for watching, and I will see you next week.